Going over the trades on the day, here are the results. Minus 1200, we had a comeback at the end of the day with some long trades. Minus 200 on the 50K, minus 1200 on the 200K, down 61.50 on the week on the 200K, and down 1070 on the week on the 50K. We were at equity peaks last Thursday, so it's been a five days of tough sledding. And just if you take a look at the markets, you just see the back and forth price action, really extreme. I want to go over the CVIX indicator as well. The CVIX indicator is for capstone VIX indicator, looking to call the turning points versus the VIX. And if you can see here, it's at 2.55. Yesterday it hit 2, which was its highest level in a long time. Today it's at 2.55. Just an extreme number of reversals. It takes the number of reversals, 1/3 of 1% reversals, 1/3 of its daily ranges, and it divides it by the VIX. And so there were 80. Right here you see 80, 1/3 of 1% reversals. You divide that by the VIX, you get 2.55, and just a challenging market to trade. We actually weathered those losses pretty well today with that rally at the end of the day. We were net short down here, and the market wouldn't break down. It continues to get propped up and unnecessarily propped up. Every day the hyperventilating dip buyers have come back in May. They gave up in April, and they came back to this theme in May where we're gonna try to call a bottom. We're gonna try to call a bottom, and then it won't break down at the end of the day, and it just gets propped up. And so some days it does, but I don't think there's ever been a bear market where it's bounced this much. It's been propped up this much. Certainly, the market will make V reversals at the lows at times, but it should typically have some. A bear market should typically have some more harsh selling at the lows. You should be able to short the lows and get some follow through, and we're just getting nothing but bounces on this month. And actually in January, February, March, it was similar to this. April we had a little more selling, good selling trends on the day trades. And then in May, once again, it's acting a little bit more like January, February, March. But the models we're using, they're up on the month. They were up in January, February, March as well. So we're trading it, and we've had a normal drawdown right now. About 5 days ago, this time last Thursday, we were at equity peak. So this is the CVIX indicator, and I've updated my website, but I don't have this on there yet. So it's one of the things that we look at and still trying to figure out the best way to implement. You don't want to filter your trades too much, and so that's the CVIX indicator. Let's take a look at the trades on the day. So here is the Nasdaq. Here's where we were. We were short going into the close. You see this. It just wouldn't budge to the downside. So it rallied and tick pullback, got long. EVP1 got long. After Cobra 3 was stopped out, and we made up some losses there and paired our losses on the day to a reasonable level. SR counter trend 2, Nasdaq got short here, was profitable. SR counter trend 2 V2 1M got short and was stopped out. Cobra 2022 got a short trade overnight. Tick reversal didn't take any trades today. That's usually a pretty active strategy, and so it did not take any trades today. Unusual. For that strategy not to take any trades on especially such a high CVIX. And so you have 1, 2, 3, 4, 5, 6 trades on the Nasdaq, and 4 out of 6 were up on the day. So 4 out of 6 Nasdaq strategies were up on the day, and we were net profitable in the Nasdaq. Now the big loser on the day was the data moving average, although it did capture two really good trades at the end of the day. It got short here. This is also short. We're banging on the lows down here, and it reversed on us. We got long. A data moving average got long. Cobra 3 got a short trade. Gap continuation in reverse, lost today. The SR counter trends were profitable. They just look like scalps here. Night trader lost overnight, so that was down. And so on the ES was down today. Nasdaq was up on the day, and ES had 1, 2, 3 strategies that were winners. 3 strategies that were losers. So 3 out of 6. Adaptive moving average really just got chopped up. For about 3 days now, it's kind of gone through a drawdown from this point right here on, let's see, when was this? This was Tuesday, I guess. Let's see, Thursday, Wednesday, Tuesday. And so Thursday, we have this pre-CPI, chop, chop, chop. We see it's up on the day, but it makes this equity peak here, goes through a drawdown, and then it chop, 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 chop. Is profitable here. This is up on the day as well. But then it goes through this drawdown here. So you get this range right here from pre-CPI to CPI day to the day after CPI. Very choppy. And it was at equity peaks yesterday. Adaptive moving averages at equity peaks yesterday. Let's take a look at that. This is the MES based on 18 micro. So it's up at equity peaks. Had this drawdown now. So adaptive moving average is the biggest loser on the day. It's one of our top strategies, though, that's been working for us. So 3 for 6 on the ES, and Nasdaq was up on the day. Those are the trades on the day for April the 12th, 2022, and we have 1 trading day left in the month. Once again, here are the final trades on the day, final results on the day, minus 1,200 and minus 200 in the 200K and 50K portfolios.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.